The Aven Home Equity Visa card represents a modern shift in how homeowners can access the value built up in their property. It functions as a hybrid financial tool that looks like a standard credit card, but is actually a home equity line of credit. Because the limit is backed by the equity in a home, the interest rates are significantly lower than what a person would find on a traditional credit card. Most standard cards carry rates between 20 and 30%, but this tool offers a variable annual percentage rate range from 7.49% to 14.99% on creditworthiness and the prime rate. There is even a maximum cap of 18% to protect against extreme market spikes and a 0.25% discount for enrolling in autopay. This makes it an incredibly powerful option for anyone dealing with high-interest debt or planning significant home improvements. The speed of this platform is a major highlight for those used to the slow pace of traditional banking. While a standard home equity line of credit often takes 30 to 45 days to close, this digital-first approach allows for a pre-qualification in just 2 minutes using a soft credit pull. Funding can happen in as little as 3 to 7 days because the process uses an entirely online notary and an automated valuation model instead of a physical appraisal. It is also one of the rare equity products that rewards spending, offering an unlimited 2% cash back on every purchase. This is a high rate even for premium unsecured cards. Furthermore, the lack of middleman fees is a huge relief for the budget-conscious, as there are $0 annual fees, $0 origination fees, and $0 appraisal fees. Financially, the high credit limits, which can go up to $400,000, can help a credit score by lowering the overall utilization ratio. There is also a great deal of flexibility in how the balance is repaid. A person can choose to make a minimum payment of 1% of the balance plus interest, or they can move the balance into a simple loan. This simple loan option turns the balance into a fixed-rate, fixed-term installment plan lasting 5 to 10 years, which provides predictability in monthly budgeting. It effectively solves the pain point of being stuck in a cycle of high-interest credit card debt by allowing for consolidation at a much more manageable rate. However, there are serious considerations to keep in mind before jumping in. The most significant risk is that the home serves as collateral. Unlike a standard credit card, defaulting on this balance means a person could actually lose their home because the card is a lion on the property. There are also specific costs to watch out for, such as a 2.5% fee for cash outs or balance transfers. While there is no annual fee, some states might require notary fees or mortgage recording taxes that the borrower has to pay. Additionally, because the rates are variable and tied to the prime rate, monthly payments will increase if the Federal Reserve raises interest rates. It is also not available everywhere, currently excluding states like Texas and New York, and it is generally restricted to primary residences rather than investment properties. This tool is ideal for responsible homeowners who have high interest debt and want to save thousands in interest by moving that debt to a lower rate. It is also perfect for those who want the convenience of a card to pay for home renovations while earning cash back. It is not a good fit for anyone who struggles with overspending, as having a massive credit limit tied to a house is dangerous if not handled with discipline. It also requires a combined loan-to-value ratio usually under 85 to 89%, so those with very little equity may not qualify. In summary, this card is a sophisticated tool for debt consolidation and home improvement that offers the speed of a startup with the low rates of a mortgage product. The unlimited 2% cash back and lack of many common fees make it highly competitive. However, the risks are substantial and cannot be ignored. Because this is a secured debt, the primary risk is foreclosure. If the balance is not managed correctly, the home is at stake. It is a powerful financial instrument that requires a high level of personal responsibility and a clear understanding that the property is on the line.